All right, thank you everyone for joining another interesting session related to planning and conducting risk-based audit. So if you are actually doing something like this in Dubai, any of you did the skydiving? What do you think the main issues that can happen when you do skydiving in Dubai? I'm saying in Dubai, look what can happen. You can get on fire because if you are doing it in the summer and you are going fast from higher latitude, you can actually get on fire. So we need to address all the issues of risk. Someone said here, actually you can die. No, dying is the consequences, not the risk. The risk, maybe, the parachute will not open, maybe you get on fire, maybe, you will get heart attack while you are doing it. This is why they advise don't do it if you have any heart condition issue. So what is the definition of risk? We say risk is the possibility that an event will occur and adversely affect the achievement of the objective. This is the definition of risk. They say risk is the possibility that an event will occur and have impact on achieving the objective. So this is why we say any event that can happen and have negative impact. See, this is what you need to be careful when you define it. If it will have positive impact, we call it opportunity. But if it will have negative impact, we consider it risk. And we can measure risk based on the impact and likelihood, based on how much this risk is going to hit us, how much it's going to affect us, and how likely this risk to happen to us. And this is where, what's going to happen in the future when we come back after this crisis and someone working in our organization, and he, for example, will get the corona. Who is the bank is actually this going to be covered by the insurance policy for them? This is, for example, one of the risks. What about if one of our clients got corona because of an interaction happening with our bank? Are we responsible for that? So you need to say how likely this incident to happen and what is the impact that can result from that incident. So they say when we are looking at risk, always we look at risk and opportunity by saying, when we are managing risk, we will be able to reduce the negative impact. This is what we call preserving shareholders' value. The negative impact will be able to reduce. At the same time, we will be able to We will be able to preserve the shareholder value. We will be able, if we manage risk properly, we will be able to increase our revenue, get more market share, create new ideas, new products. This is why managing risk is not only to avoid negative impact, but also to be able to do it in a proper way. This is why today they are moving from managing risk saying we need to minimize the amount of risk to take to saying no, today we need to optimize the level of risk taking. Meaning we need to take more and more risk as long as we can manage this risk properly. And this is the main idea. So what are the risks that we need to look at? When we are speaking about risk-based audits, we need to look at the strategic risk affecting our strategic objectives. We need to look at the operation risk affecting our operation objective. We need to look at the reporting risk affecting our reporting objectives. Reporting here, we are speaking about financial and non-financial reporting. And we speak about the compliance risk that can affect our compliance objectives. These are the 4 objectives that we need to look at, and based on these objectives, we need to look at the risk related to it. Then we need to ensure that management, they have the proper risk management in place to ensure that they are managed to reduce the amount of risk to the acceptable level. So let me start by this story. Over a couple of months ago, I was actually climbing a mountain with my friend, and we were going on top of the mountain, and suddenly a tiger attacked us. So what I did, I quickly opened my bag and I start looking for my Adidas shoes to wear. And my friend, he said, "Are you crazy? You think if you can wear your Adidas shoes that you can run, you can be faster than the tiger?" I said, no. At least I will be faster than you, right? And this is exactly what will happen in the banking sector. Banking sector is like domino effect. So what will happen usually, when we are actually faced with new issues related to regulations from the central bank, related to financial crisis, related to money laundering, related to hackers, all these actually gonna affect all the banks. However, the bank that got the right risk management process and internal control in place that can respond quickly to these risks are the bank that they are going to be affected the least. Why? Because if hackers are going to attack, they are going to attack the weak banks. If central bank is going to impose compliance issue, it's going to start by looking at these banks that they have issues. So until they finish from dealing with these banks, at that time, you will be able to make sure everything in place. The idea here that we need to actually, as an auditor, to think that we need to manage the risk related to the banking sector in real time. We call it, we need to audit at the speed of risk. So are we auditing at the speed of risk, or we are auditing after the facts? That's the whole idea. So now let's discuss what's going to happen over the next 3 sessions. So these are our agenda for the next 3 sessions. Our agenda is the following. Today we are going to be focusing on planning, understanding exactly how can we determine the engagement objective and scope, understanding how can we look at the client and understand exactly their objective and strategies, and figure out what are the risks that they are going to have related to these objectives and strategy. We are going to be speaking about, after identifying these risks, trying to assess this risk, which one is high, which one is low. We are going to try to identify the key controls that they need to have in place to ensure that they manage this risk in the proper way, and figuring out exactly how they are designing and implementing these internal controls. And then how can we actually do the planning for the test, how we are going to actually divide our audit plan and determine how we are going to do the testing. And finally, how can we develop the work program and allocate the resources inside your audit team to conduct the audit. So this is our agenda for today. For the next session tomorrow, we are going to speak about how can we actually conduct the audit. We are going to be speaking about how can you perform the audit, how can you gather the evidence, how can you evaluate the evidence, how can you reach to a conclusion, and then how can you actually document these observations that you have in your work program. And finally, after tomorrow, we are going to be speaking about communication, about how can you actually write these audit reports. And when you are writing this audit report, how can you actually document your observation? How can you actually document the result of the audit? Try to write your recommendations. How can you actually communicate these recommendations effectively to the clients? So these are the issue we are going to cover. Let's start with the first one. The first one is related to planning the audit. So when we are speaking about planning the audit, we need to say, what are the steps we need to take? It's very important for us as an auditor when we are conducting risk-based audit to do the audit in the right steps. The meaning, don't start doing an interview before we collect the document. Always, when you are going to speak with the client, make sure you review the policy and the procedures, so to verify whatever he's saying is matching the policy and the procedures. So the steps goes like this. Number one, we need to conduct a preliminary survey. We need to get information from the client about the entity we are auditing. So if we are going to audit a branch, for example, we need to know, for example, how many employees in the branch, how many transactions they have, what about the loans, what about non-performing rate in that bank, what about, all these issues, the customer complaints in that bank, what if they have any compliance issues, if they have any recent termination related to any disciplinary issue. You need to collect the information before you go there. After that, you need to perform risk assessment. You need to say, what are the objectives of this division or this organization or this department? And after that, you need to identify what are the risks that they are going to have. So what do you mean by risk assessment? First, you need to identify the risk related to achieving these objectives. After you identify these risks, you say the risk, we have risk A, B, C, D. Then you need to assess this risk before looking at the internal control. So you need to say, for example, risk A is high, risk B is low, risk C is medium. So you need to actually assess them. After you assess them, you need to go to step number 3, which is evaluating risk. What's the meaning evaluating risk? Now you have 2 risks that we consider them high. Which risk you need to focus on first? Which risk is more important to your organization? So this is what we call performing risk assessment. We are going to go over that in details. Then we need to create risk control matrix. We need to understand which risk is actually controlled by which control and which control is actually managing which risk. So in that way, we understand by doing that, maybe some risks are not managed by any control, or maybe we have controls, they are not managing any risk. So we need to eliminate these controls because they are waste of resources. Also, we need to define the audit objective. It's very important to define your audit objective. What are you trying to achieve? And we are going to go in details about how can you document that in your audit plan properly. What are the best practices? Then you need to select your scope and methodology. You need to estimate your resources and do allocation of resources. And then you need to develop the work audit program for your audit. So let's start by number one. Number one, and it's very important, and sometimes we forget about it. You need to understand the business and industry you are in. You say, yeah, what are you talking about? I work in my bank, and I've been working in the bank for the last 5 years. What industry I need to understand? What business I need to understand? I know my bank. No. What I tell you that go and read research For example, here in Dubai, we have Oxford, they publish research about the banking sector. They are speaking about what are the non-performing loans, what about the number of bounce checks, what are the recent changes, what are the regulation, what are the compliance issue. So at least you understand the environment that your bank is operating in UAE. Try to see the recent publication by the central bank. Central bank said that, central bank trying to focus this, central bank recommended these issues, and try to see the international rules and regulations related to money laundering, related to compliance in the banking sector, and related to financial crimes. By having this understanding will help you when you are going to audit any division inside your organization to be able to look at what are these risks that can affect that operation or that branch. So this is why it's very important to understand the industry and the external environment we are operating in, to understand what's going on in other banks. This is why it's very recommended to read cases about what happened in other banks. Oh, this bank, there's a fraud happening. This bank, they have issue in non-performing loans. These banks, they have risk and they were exposed related to these issues. This bank, they have money laundering. By reading cases about these banks, you will get an understanding what can happen in your bank. Then you need to go and examine your business operation and processes. You need to ask the business owner, what are the new processes you have implemented? For example, your bank is moving to a digital bank. Your bank is actually implementing a new system. Your bank is implementing smart pass for customers. So what are these new implementation that you have done inside your organization that maybe you need to look at it because they are maybe going to have risk? Why they are going to have risk? Because they are new. They are just started. So maybe they don't have the proper internal control and risk management in place. After that, you need to ask the organization, what kind of policy and procedures you have, what kind of governance structure you have, what kind of management review you are doing. And that will help you understand exactly what we call the control environment inside the organization. And after that, you ask the organization, what is the objectives and strategy for 2020, 2021? So we are actually gonna focus our audit. Again, we say our focus is on performance, not conformance. We are going to focus our audit to be able to address these issues. The meaning, our audit should focus not on the risk. Because what if you say, oh, there's a major risk, but if this major risk is not going to affect your achievement of the objective, is not important. Give you an example. If you are driving your car and your air condition is not working and it's hot summer, you say, this is major risk. I'm going to come to the meeting and I'm sweating. It's going to actually be a very bad experience. But this will not stop you from driving your car. So we know it's an important major risk, but it's not going to stop you from achieving your objective, because your objective is to go from A to B. So that objective will be achieved. You will be doing it while you are suffering. Yes, we understand, but this is not going to stop you from achieving your objective. However, if you have issues with your brakes, if you have issues with your tires, definitely that's going to be a major risk and you are not going to be maybe able to reach your destination, or maybe you will not be able to take that risk by driving the car. So this is why it's very important to focus on what is the objective of the division, objective of the organization, the strategy we are trying to achieve. And based on that, we determine the risks that we are going to go and address and we are going to audit to ensure that they are managed in proper way to achieve our goals and objectives. Then finally, we need to ask the organization how you are actually measuring your performance. Because at the end of the day, your executives, they are going to say, we have achieved the goals. The question here, how we have achieved the goals. Are these measures accurate? Are they representing exactly what happened in the operation, or someone manipulating the measurement techniques? So the first thing you need to look at when you are conducting risk-based audit is 4 elements. What are they? Number 1, objective. We need to know the objective of your audit. Number 2, we need to identify the scope of the audit. And then we need to look at the resources. Then we need to implement the work program. So what are you doing when you are deciding exactly which unit we are going to audit? What are you doing when you are deciding which division, which process we need to audit? Are you doing in your audit planning something like, let's bring this crystal ball and trying to figure out exactly what the audit committee is want us to do? Who is determining inside your bank the entity, the risk that you need to focus on when you are doing the audit? And that's always the question you need to ask. So we say sometime what will happen in big organization like a bank, and if they have branches all over the world, what will happen? They say, okay, let's try to guess which branch we need to audit, right? To give you an understanding of this. I'm not saying guessing, but sometimes, you know, there is a manipulation in the process. So when I worked in US and I was working as a financial auditor, something very interesting happened. we audit all the hedge funds, around 4,000 hedge funds in US. So the meaning they are all around US in more than 50 states. So when we are doing an audit, my manager will tell me, Iyad, next week, we are gonna have the discussion related to the audit plan to decide which hedge fund we need to audit. I'm gonna try to get the hedge fund in California. Why? Because now it's winter, it's cold in Chicago. So what about for all of us flying to California, enjoying the nice weather, or Florida? California or Florida, but I don't want to go to New York. It's so cold. The other manager, when we are in the summer, will say, Iyad, I'm going to try to actually find an audit, not in Las Vegas, even we love to go to Las Vegas, but I'm going to try to find an audit in Washington, D.C. I'm trying to find an audit in New York because the weather is nice there. We don't want to be in a hot weather like Las Vegas. So are we focusing on our audit is based on the weather, or are we focusing on where is the risk? And unfortunately, in situations like this, if you have big audit team like your department, sometimes the focus will be, oh, okay, I don't want to go to Fujairah to do that audit. I need to drive 3 hours every day. I want to do the audit next to my house. It's easy. I can just go and do it. So this is why so many factors that can influence your determination in which department you are going to audit, or which branch or which process. For example, give you another example. When I used to do an audit in US, we know when someone is doing anti-money laundering audit, oh my God, this is like 2 weeks audit, so much procedures and argument and testing, and we have to look at least 35 points to go over them one by one. But when you are doing cash testing, it's easy. You go, you look at the cash procedures, you look at the bank statement, finish, 2 days. So this is why sometimes, you know, the difficulty of conducting certain audits will drive the audit manager to focus on doing whatever easy rather than whatever important. And this is why your audit should focus on whatever important, focus on the critical issue, not focus on the weather. So how can we decide which area we need to audit? They say, why are you conducting the audit? This is the first question your head of internal audit should ask. Why are we auditing this division or this process? It can be part of annual audit. For example, as an annual audit, we need to actually audit this process. This is part of every year we conduct it. Like, for example, we do cash count. We do actually testing of certain things. In retail, they do inventory count. Annually, they have to conduct inventory count. Or it can be a high risk area, a high inherent risk area. They say always a high risk area inside the bank is cash. Wherever there is a cash, there is a chance of someone stealing that cash. So maybe we are focusing on high risk area. Or a risky area based on the last audit. Last year, you have conducted an audit to that division, and you have noticed there are so many issues happening. So based on that, you said this year, we are going to go again and conduct another audit to that division. Why? Because we are afraid they have still some issues. So maybe that can be the situation. Or it can be requested by management. Management, they will tell you, listen, in our branch, we have implemented a new system. And because we have implemented a new system, we are afraid that we don't have the proper controls, we don't have the right risk management in process. So why don't you come as an auditor and you come and do an audit and testing over our operation to ensure that everything is done properly. So maybe that's the idea. Sometimes we have unusual circumstances that will lead us to conduct an audit. What's the meaning unusual circumstances? Maybe, for example, the head of the branch, he left. We are trying to call him, we are trying to contact him, there's nothing going on. We check the operation in the branch, everything seems okay. But we are wondering why this guy disappeared. So we have unusual circumstances will lead us to send the audit team to go quickly to check what's going on to actually give us an understanding of the situation. And this can happen sometime. We did it all the time in US. For example, we get a customer call from one of the customer saying that he invested in this hedge fund, and he called the hedge fund, and the hedge fund is not giving him his money back. He made money, it's not he lost, he made money. But he's requesting to withdraw the money, the hedge fund said no, and they stopped answering his phones. So maybe at that time we think maybe we have special circumstances, we need to check on what's going on with that hedge fund. And sometimes because the changes in the business, there are changes, there are new procedures, there are what we call them new management team. We need to come to check that the new management team is following the policy and procedures in the right way. So these can be the reasons why we conduct the audit. Always we need to understand before going and conducting the audit, what is the risk that causes this engagement to happen? It's not like we are going to say, oh, do you know this branch? We didn't audit it for a while. Let's go and audit it. We don't go audit a branch just because we didn't audit it for a while. We should understand exactly what is the risk, what is the reason for us to audit that branch. But if you come to reality, this is really difficult. Why? How many branches you have? Do you have a dashboard inside your head office where the CEO will come or the chief audit executive will come and look at this dashboard? And they say, I can see this branch risk is 90, for example, from 100, which is so high. This branch risk is only 10. This branch risk was 30, but now went to 70. So there are issues with it. Do we have a dashboard inside your department telling you today, tomorrow, and yesterday, how much is the risk score for each of these branches? I don't know if you have that, but that will be lovely. But of course, you have something similar. Let me make it easy for you to understand. In your bank, you have a system in your back office will say how much money you have in your ATM. So many times I went to ATM for your bank and I discovered they have no money. Yes, my delegates, they went to the bank and they discovered, oh, okay, currently they don't have enough money in that ATM. And what your bank is doing to manage that risk, your bank is doing the following. In the head office, they have a system where they can identify which ATM is out of money, so they will be able to send individuals to actually go and put some money in these ATMs. So based on that system, they understand that this ATM, because it's located in a faraway location, not so many individuals, they are going to take money out of it. So every 1 week, we go and put money in it. But this ATM, maybe twice a day. Why? Because so many transactions are going to happen and individuals, they are going to take a lot of money. And this is exactly what will happen for audit. For audit, we need to have systems similar to this ATM, where we will be able to identify by numbers or by color, if you don't want to say by numbers, or by ranking, saying, for example, high, medium, low. Which one is actually high risk, medium risk, low risk? Or give it a risk score. We are going to discuss about that later, about how can you implement risk intelligence system related to your audit. And actually, in my organization, we have implemented over 4,000 hedge funds. And I will share with you how you can implement something similar. So now, after we decide what is the reason of conducting this audit, we need to understand how can we establish the engagement objective. We need to determine what are the objectives of this engagement. The meaning, we need to know exactly what are you doing, and we need to know why you are doing it. So always when you are writing an objective, and I have seen so many objectives written on audit plans, writing the objective should always have two things. Should start with what and end with why. You need to always start with what, end with why. What's the meaning of that? Look at this example. What are we doing? We are verifying account receivables. Please don't use the word we are testing. What's the meaning testing? It's a big word. You can say we are verifying, we are counting, you need to speak exactly about the actual testing you are gonna do. Are you tracing? Are you verifying? Are you actually totaling? What is the testing you are doing? Verify the account receivables. This is the what. But how many you write in your report? We are gonna do testing of the loans outstanding. Okay, what's that? It's only speaking about what you are gonna do. You always need to write in your audit objective why you are doing it. The meaning, when board of director and audit committee, they are gonna read, they need to understand why you are doing this process in your objective, not when they read later. So you need to say to determine if the valuation of account receivable based on the aging is actually not overstating more than 10,000. You say, yeah, but this is so much information. This is the right way that not me, I say it need to be done. When you are writing the objective, you need to say what are you doing and why you are doing in details. The meaning, this is a question. At the end of this question, you can say, yes, the account receivable are outstanding properly, or no, they are actually not, the department is not following the procedure and they are outstanding for more than 10,000 and they are aging and no one is following on them. And that's the answer of your testing. So this is why you need to have very clear objective. So after this session, after our discussion, when you are going to have your private discussion, go to your management and say, let's review our audit plan. Are we writing the audit objective in the right way, where we start with why and end with what? If these two elements are not there in every audit objective, the meaning it's actually not following the best practices. Not saying it's bad, but our subject here and our course is about the best practices you need to follow. Okay, before we finish here, we need to actually focus always and consider fraud and error. The meaning, IIA said today when we are conducting any audit, most likely the result of this audit in the old days will be non-compliance, will be mistakes. But today, most likely is going to be maybe fraud or mistakes, because fraud is happening more and more in the banking sector. So this is what you need when you are going to go and conduct the audit for that division. You need to say, what are the chances that they are going to have deficiencies related to fraud or error? Because you need to consider, if you are expecting maybe the deficiencies are related to error, so the minute you find these deficiencies, you should not touch your hand. You should not do any additional testing. You need to refer the issue to the fraud department, unless your organization said the internal audit department will do fraud examination. But in general, in the banking sector, if you have issues related to compliance, which is errors, mistakes, you refer it to compliance department. If you have issues related to fraud, you refer it to the fraud department. And before you start the audit, you need to ask yourself, what kind of risk management, control, and governance the organization, they have it in place in that process to ensure that they are managing everything properly. Because based on that, you determine your testing. We are going to speak about that later. So now, let's see here, it's a very interesting survey from IIA speaking about the resources used to establish your audit plan. But why are you conducting your audit? So again, we can go and see exactly what's happening in the Middle East. We can see that 61% of the situation happening based on requests from management. And sometimes it's based on the request from audit committee. So always we need to ask ourselves, why are we conducting the audit? Is it because board of directors requested this audit committee, or is it because we have done the assessment and we noticed that this is a high risk area, or the management requested that? You need to know the reason. So when you are writing your engagement objective, I have seen so many engagement objectives that they mean nothing. They are waste of time, which is we need to review. You should not use the word review. Word review by IIA was eliminated in 2011. From 2011, IIA said, please don't use any word called review. You can use word called assess, evaluate, determine the effectiveness, test. Don't use the word review, because review is like this. You are reviewing something and you move on. Or don't say, we are going to look at. You are looking at it. It's very beautiful. We are not trying to review or look at. We are trying to do the proper testing. Again, if you are using review today, maybe it's okay, but we are speaking about the best practices. Best practices, you remove word review from anything related to your audit planning documents, to your work programs, and to your fraud, audit reports. Now, the objective of the engagement, always you should have in your mind when you are writing it, you are trying to explain to the audit committee and board of directors, what are you trying to achieve? So this is why the language should be clear. So when someone will read it, they will understand why you have went to conduct this audit in this division. Now let's speak about the scope. For the scope of the engagement, you need to actually speak about the areas you are going to cover during the audit. So in that way, there's a very clear understanding. For example, if you are going to the branch to cover all the areas except certain areas, you need to show the limitations. You need to say, we are actually not going to actually cover these areas. But see, sometimes we don't like to use the word limitations. So what you can use in your audit planning documents, rather than we have limited our testing to this area, which looks like you have issues. Why you are limiting your testing? You don't have resources, or you don't have time, or you don't know how to audit it. You can change that wording, remove the word limit, and use always the word, we have focused our testing on this area. So it looks in front of management and board of directors and the committee that you are actually focusing on risk rather than limiting your audit. So remove the word scope limitation. Don't speak about scope limitation, speak about scope focus. What areas we are going to focus on. So what areas you will focus on during the audit? You can focus on the process. You can focus on the time we are actually auditing this process from this time to this time. You can focus on the location. Only we are auditing the branches in Fujairah. You can focus on one component of the process, saying we are only focusing on the approval process of the loan. We're not focusing on how the information collected, on how the payment after. We're just focusing on how the approval will be done. So it's very important when you are writing your objective to speak about the scope of this audit. Also, you need to prepare the audit committee, board of directors, and the management about what is the outcome of your audit. What are the deliverables after? The meaning, after you are going to conduct your audit, what is the result? Are you testing actually the financial statement? Are you testing the controls? Are you going to show them the inefficiencies? Are you going to show them non-compliance? What is the outcome? What are you going to give them at the end so they will be able to understand? So this is why IIA recommended that before conducting any audit, you need to meet with the client, with the department you are going to audit, and also you need to have another meeting with the audit committee to understand from them what are their expectations about your audit. The meaning, you have communicated to them based on the audit document plan that we are going to conduct audit related to your department to do 1, 2, 3, 4. Don't only send them that, meet with them and ask them, what are your expectations? What are you expecting us to do based on this testing? Maybe they will tell you, oh, we are expecting you to also look at, for example, the non-performing loans that have been. You say, no, 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 this is not part of our testing. We are looking, maybe you look at the customer complaints. You say, no, that was not part of it. But if you want it to be part of it, now it's good time that you told us so we can actually include it as a part of our audit plan. Not after you submitted the report to them, you say, oh, but you didn't test this area. You say, no. They said, we thought you are testing this area based on your documentation. So this is why you always to understand their expectation related to the scope of the audit, related to the areas that you are going to provide assurance over, and related to what is the final communication of the report. The meaning, you need to understand their expectation. Are they expecting a formal presentation or a final report or informal report? This is important at the beginning before you start. Now, after you have everything in place, you need to say, when we are going to look at the processes and procedures inside the organization, we need to convert it into flow chart. You say, every process and procedure, we need to convert it in flow chart. That's a waste of time. No, the idea is like this. When you are reading any policy and procedure and you need to do a testing for it later, how you are going to do testing? You are going to go, okay, number 1, number 2, number 3, number 4, to see if the person who's, for example, approving a loan, following all the policy and procedures. So at the time of the testing, it's going to be hard for you to understand it and explain exactly what you are testing and where are the internal control processes and the risk management. So what is the recommendation? The recommendation is like this. For anything more than 5 to 6 steps in any process, you convert it into a flow chart using different flow charts samples. Again, if the process 1, 2, 3, 4, it's okay. But if it's more than 5, 6, what you do, you need to convert it into flow chart. Why? During the planning stage, if you convert it into flow chart and you have it as a document with you during the planning stage, when you are doing the testing, it's so easy. You can say, okay, here is the information will come from the customer. Okay, here we have a control point. Are we following that? Are we verifying the information from customers? Okay, we are verifying. Okay, now the employee is sending it to the head office. Are we actually ensuring that the person have all the documents in place? Yes, we have it. So now you have a flow chart for you to do your proper testing. Compare if you are actually documenting the work as step by step in text, in words, it's so hard for someone to understand it. It's so hard for your supervisor to review it, and for the chief audit executive to review it, and for the audit committee later to understand what are the issues that happen. Flow chart for more than 5, 6 steps, it will be very useful at the planning stage to be done. So what information and also we need to gather during the planning stage? We need to, before we start our audit, ask management to give us all the policy and the procedures and manuals related to the operation we are going to audit. We need to get the organizational chart. Why it's important to get the organizational chart? Because it's very important to understand who is responsible for who. If I want to go speak with the loan officer, I need to know who's the loan officer. If I need to speak with the assistant manager, I need to know him, and I want to know his responsibility. So I will know exactly who I should be speaking with. Also, I need to know their job description. I need to know the process map, how, if they have, sometimes you don't have to create these flow charts. In so many organizations, the management team already documented the flow chart or the process, so you can use it. If they have any narrative description about the process or what will happen, also we obtain it from them, and any contracts that they have signed. So in that way, we can obtain it to understand and verify, okay, what are these contracts? What's happening with the nature of the contracts? This is not for more front office operation, more maybe for the head office, the bank. So here's an interesting example to give you an understanding. This is an example related to Etihad Airline. So when Etihad Airline is actually operating and they are flying all over the world, we need to, before conducting the audit for Etihad Airline, to give you an example here, you need to ask the management of Etihad Airline, what are your objectives in 2020 and 2021? Because if they say, now in 2021, we are going to start operating in new flights, for example, to go to Madrid. So in that case, if they are going to operate a new flight to go to Madrid, I don't think it's going to happen in the Corona season. But if this is the objective, we need to say, okay, do you have all the controls in place? Are you making sure you are going to sanitize the planes? Because in Spain, they have so many Corona cases. Are you ensuring that you have enough passengers so you can carry them going and coming back? So you need to look at all these procedures that they are going to actually have in place. And this is why you should not start your audit by saying, what happened in the past? What are we doing today? No, you should start by asking, what are the objectives for this year, for next year? And based on that, you need to identify the areas of high risk and you focus your audit on it. So always starting by asking, what are today plans and future plans, not what happened in the past or what is our operation last year. After that, you need to allocate the resources. You need to say how many staff we have and do we have appropriate and sufficient staff. So here we need to stop to understand the difference between them. IIA said, when we are speaking about appropriate staff, do you have staff with the right knowledge, skills, and experience to conduct that audit? So we are speaking about technical audit, maybe IT audit. Do we have staff related to IT audit? Or we are speaking about audit related to anti-money laundering. Do we have someone who is experienced in this area? They can understand the rules and regulations. So this is where, number one, do we have appropriate staff? After, if we have appropriate staff, do we have sufficient resources? Do we need this audit to take 7 weeks or we need to finish it in 1 week? So do we have sufficient resources to be able to allocate to do this audit? This is why it's very important to determine how you will do it. So let me explain to you how usually you do it. The chief audit executive or the manager, sometime when they are conducting an audit, they will say, okay, what is the testing you are going to do, sir? Okay, for you, Mr. Ahmed, you are going to do testing related to what? Related, for example, to credit card approval. So in that way, it will take you around 3 days. See, so he's estimating exactly. First, he's selecting the person who will believe that he got the ability to conduct it. And he will assign him a time frame and he's expecting he will complete it within time frame. Then he will take another person. You are going to look at the opening new accounts. And we are estimating you will do it in 2 days. So now he will take the staff that he got and he will allocate them to these different audits by understanding from their skills level how much it will take. Now we have a new staff that we got. He got no experience. So what we will do, we will allocate him maybe a little bit more time and we will have another staff supervising him to ensure step by step he's doing it in the right way. So this is why allocation of resources is very important to ensure that the audit is done in the right way. Give you an example from what we did when we used to do financial audit in US. Sometimes they say, yeah, have you done any anti-money laundering audit before? I say, no, I have done financial, I have done cash testing, I have done processes, but not anti-money laundering. They say, why don't we give you the chance on this audit? See, this is why it's very important to do a rotational audit, that we are going to give you the chance on this time to do it. Not every time we are going to assign the same person to do the same audit. What about the other team members? So sometimes we need to have different staff doing different work. After that, we need to create the work program. We need to create exactly what are the testing that we are going to do. Okay, first, we are going to collect the policy. Then we are going to interview the management. Then we are going to go look at the processes. And we are going to see if these processes are helping the organization achieving the objectives. If they are helping the organization, now we are going to do the testing. So do we have a step-by-step work program to do it? Now for auditing branches, because branches, they are operating in the same way, you can have standardized testing, like a checklist. You check number 1, number 2, number 3, number 4. In that way, you do the testing over the bank. But for certain processes and certain operations that they are different from each other, sometimes we need to create a customized testing for it. This is why you need to have all these testing in place. Like in US, when we were operating, we have this testing already in the system. So we didn't have a Word document. In the old days, we had a Word document. So in that Word document, for example, saying, okay, step number 1, you obtain the policy and procedures. And then under it, we can say we have obtained the policy and procedures from this organization and it's filed as SD1, as source document number 1. All right, after that, after obtaining it, you need to look at this and that. So see, so there are step-by-step. So these are the step-by-step work program that we need to have before. Not say, okay, here is the auditor, go and figure it out. See if there's anything happening. No, you need to guide them by having this work program in advance there in place, or create one before you start your audit. So before we start the planning risk-based audit, any question from you related to the risk-based audit, related to how can we define our objective, how can we look at our scope, how can we actually create the resources and create our work program? Any questions from you before? We need to cover one area by one area. Any question? Looks like everyone is happy, or I know it's lunchtime, but I'm sure you took your lunch before coming to the session. By the way, in enjoying your lunch while you're attending the session, maybe it's also an interesting option. Don't raise your hand. You can ask your question in the question and answer box. Later, we will give you the chance to talk. So if you have any question, you can just write it in the question and answer. Any questions you have related to the session? Okay, if you don't have any questions now, it's okay. We can continue later. If you come up with any questions, you can actually write them there and we will address them. Now, after we have defined our objective and scope and we determine the resources, we need to understand how are we going to conduct this testing. It's very important to create a strategy for our audit. The same thing like we do in anything, we follow a strategy. What is the strategy we are going to audit? So let me explain to you the strategy before we start, so you will have a good understanding of the strategy. It's very important to have understanding of the strategy. The strategy will go like this. Number one, we are going to look at the objective of the organization. So we ask the organization, what's the objective? They tell us the objective. This is number one, finished. After that, we are going to look at the risks that are going to stop the organization from achieving their objectives. After we look at this risk, this is where the step is very important. These risks that we look at them, they are there before looking at the risk management processes. So when we look at this risk, we ask the organization at that point, what are you doing to make sure that you reduce the amount of risk to the acceptable level? So they will tell you, we have implemented these controls, we have implemented this risk management, we have these governance processes, we have these policy procedures. All of them are going to reduce this risk to the acceptable level. Now, based on what they have said, if you believe that these processes and controls and risk management that they have in place, they are adequate, what you will do, you will go and do testing for it. You say, okay, thank you so much, management, for implementing these controls in place. I am gonna go and do testing on it. But if management said, for example, we don't have anything, or we have implemented something, or they said we have implemented these issues, and you look at them and you say they are not gonna help us in managing that risk, you in that case go and speak with the management and advise them about what they need to do to ensure they have the right controls and procedures in place. You are not gonna waste your time in testing the policy and procedures, but what you do in that case, you go and test the transactions exactly. So to give you an example, you are trying to go and look at the credit card operation, and you want to see if actually credit card termination is done in the proper way. Termination. Why credit card termination? Because some issues can happen with the credit card termination. So what will happen in credit card termination? With the credit card termination, sometimes the employees who is terminating or closing the credit card for customer who would like to close their credit card, they can take advantage of the process. So if you go and tell them, well, we have a risk. What is that risk? We have a risk that actually the employee who is responsible for closing credit cards, he may manipulate the process. So the management will say, okay, we ask management at that point, what controls you have in place and risk management to ensure that this is gonna be handled properly? They say it's easy. When customer will close his credit card, we send him notification that his credit card is closed. And then they have to give us this OTP confirming that it's done. Well, it's an interesting control. But I can come as an auditor and tell them, really? Really? This control from the beginning is not really adequate, is not enough. Why? Because someone can manually, using humans, control the process. So for that, I'm not actually going to test this control and see if actually being followed and done properly in your operation. No, because I believe it's weak control. What I'm gonna do now, I'm gonna go and test the transactions. So again, to make it simple and for you to understand, when we are looking at testing any process during the audit, we need to make a decision at the beginning. Are we going to test the controls that we have in place to make sure they are working effectively to reduce the amount of risk? If we believe these controls are adequate, we are going to test them. If we don't believe they are adequate, we are going to go and test the transaction one by one to make sure that the process is being done properly. Then we are going to advise management to implement the proper control. We are going to go about that later in details when we go over testing. But this is always, you need to keep it in mind. The first question you need to ask after looking at the risk area that you are going to audit, do we have the proper controls and risk management in place or not? Now, why this is important, especially in credit card termination? Look what happened in one of the banks. Maybe you know which bank. What happened in the bank, in the department responsible for closing the credit card? Well, the lady who's responsible in that bank for closing credit card, she decided to play a game. And what is that game? When a customer will come with the final amount to close his credit card, she will take the money from him and she will go to the system because she got super user. She will go change his email to her email. She will change his username, his phone number to her phone number. Of course, when changes like this will happen, he will get OTP, right? And he need to confirm. But remember, he is sitting in her office. So she will tell him, yeah, by the way, for us to close your account, we need to actually get confirmation from you. You are going to get the OTP. Did you get the OTP? He said, yes. He said, give me the number so I can finalize closing your account, because we have to actually close your account so you'll not get any more notification. And of course, this message is saying, you are changing your email. Would you like to confirm? And here's the OTP. So the guy, he said, okay, she is the lady responsible. She said, I don't want to get any notification about my credit card because I'm closing the credit card. So I will give her the OTP. So he was in her office and she is getting the OTP number from him to change his phone number, done. To change his email, done. So now he's not going to get notification about future payment. But did she close his credit card? No. She kept his credit card active and she only took the money to herself. And she started making the minimum payment on his credit card. So now she actually have all the money. And she did this for more than 100 customers. And she will take the money from them and she will keep the credit card operating. Can you imagine? She had to have a full set of books to make all this minimum payment. I have sometimes one credit card and I don't make the minimum payment on time. So what happened? After a couple of months, one in person, he closed his credit card. Then he decided to get a new credit card. When he went to the bank to apply, they told him, wait, you already have a credit card with us. He said, really? They said, yes. And you didn't close it. He said, how come I close it? Here are the documents showing that I have closed it. She was giving them actually fake documents showing that they closed the account. So you need to understand sometimes when we're looking at any process in the bank, that any process in the bank, even if you think that there are the proper controls in place, you need to ask yourself, how strong are these controls? How can someone inside the bank or outside the bank break these controls? And this is why the first step is by asking, what are the risks? What are the controls? Do we believe that these controls are proper? If they are proper, we test them. If not, we test the transaction. So now let's go over the risk-based audit planning. Planning risk-based audit is, like we said, it's based on number one, understanding the risks that we have in place. What are the risks that we have in place? Are they high, low, or medium? So first, we do the risk assessment over all the risks that we need to look at to achieve the objectives. After doing that, we need to test the internal controls. And this is what we were discussing now. How are we going to test these internal controls? Well, testing the internal controls will follow the following methodology. Number one, do we have it or we don't have it? So let me explain to you, do we have it or we don't have it? So you understand exactly what will happen, which is what I explained before, but now I'm going to make it simple. When I used to do an audit with my manager in US, when we go to the audit, we were one time in Miami. So we went to the firm at 10 a.m. in the morning. So my manager was praying to God. So I said, why you are praying to God? She said, I am praying to God that when we go to the hedge fund and ask them, do you have internal controls in place? They are going to say, no, we don't have internal controls in place. I said, what? This is really bad. You are praying to God that they don't have internal controls in place? She said, you don't understand yet. We are in Miami. So if we go ask management, do you have internal controls in place? And they will say, no, we don't have controls in place. What's going to happen? We are going to say, oh, deficiency. The management, they don't have internal controls in place. Our recommendation, Implementing internal controls in place. Do we need to do any testing? No, because they don't have internal control in place. So in that way, the process is not being followed. Now we can go back at 11 a.m. to the beach because we can't do anything until next day, until we go to the next farm. I said, okay. She said, but if they have internal controls in place, the meaning you and all the audit team, we are going to stay here until 10 p.m. auditing all these internal controls to make sure they are effective. At that time, I told her, let me pray with you that you don't have internal controls. And this is exactly what will happen. The first question you need to ask any division when you are looking at the risk and you are testing these internal controls, don't go and test the internal controls. Ask them, do you have internal controls? If they say, we don't have internal controls, so in that way, you can't actually test the internal controls. You can test only the transaction. So you need to tell them, well, sorry, you have to implement the internal controls and have them in place. But what if they say, yes, we have internal controls? For example, the warehouse, we ask the management, do you have internal controls to secure the warehouse? The management said, of course we have internal controls. So we say, what is the internal control you have? They say, we have a cat. Meow. Is the cat okay? Of course not. So this is where we need now to assess, are these internal controls adequate or not adequate? Are these internal controls going to help us in achieving the objective of the control or not? Give you a simple example in the banking sector. One bank implemented a very good control, which is implemented CCTV camera. But after that, when someone came to the bank and he robbed the bank and we looked at the footage from the CCTV camera, the quality is so bad we couldn't even see his face. So is this control adequate? The answer is no. The meaning is not designed to help us achieve the objective of the control, which is reducing the risk or helping us in manage that risk. So the first question, do we have it? If they have it, second question we ask, is it adequate? If they say yes, adequate, we have a security guy standing outside. We have a camera actually with a very high quality. Now, the next question, is it working? You say, no, I don't understand. What's the meaning working? If you have the security camera inside your bank and every day, by the end of the day, actually you are over recording next day what happened today. So after 3 days, if we want to come see the tapes, we will not be able to see anything. So it's adequate, it's there, but it's not working properly. The meaning we have issues in the functionality of it, not in the design properly, but the functionality of it, how it's functioning, we have an issue with it. So if the security guy is standing outside the warehouse, but from time to time he had to go to the bathroom, so he will go to the bathroom. So for 10 minutes, there is no one standing on the warehouse. It's disaster. So this is why you need to ask them, is it working? You need to understand from them how these internal controls are operating. Give you another example. If these cameras are there inside your bank, but these cameras are actually, when it was installed by mistake, the maintenance guy, he directed the camera towards the window rather than directing the camera towards the teller. It's there, but it's not working. It's not taking video for the teller. You say, yeah, is this possible to happen? Oh yeah, there's a recent case happened in UAE, and very interesting case happened in UAE. So what happened in UAE, which is related to these cameras and internal control, two individuals, they came to the bank. And these two individuals, they came to the bank to close a bank account. They are partners in a business. Now, the interesting thing that they have a camera there in that bank. So when they came to the bank, one guy was actually wearing a hat. And the other guy was normal. They say, we are partners. They came, they closed the account. After they closed the account, the partners who supposed to be wearing a hat came back to the bank and he said, why you closed my account? Why you took my money? I was actually outside the country. So he showed a passport that he was at that time outside UAE and that he believed that his partner brought another guy with him to the branch and he was signing like him and he was using his Emirates ID to actually go and close the account. So the banks, they say, let's go and look at the footage. When they went to go look at the footage, the interesting thing that the actual camera was zooming into different directions. So in that way, we couldn't find the right location and the right person and we couldn't identify his face. And the question, why this happened, the interesting story is 1 week before, the maintenance guy was coming to check the cameras. And the maintenance guy, they said, by mistake, he changed the angle of the camera. So it was not taking exactly that corner where the person was standing. It's interesting, right? We don't know if the maintenance guy involved or not. But again, this is the interesting thing. Do we have, these internal controls in place? Yes. Are they working? We need to check. If they are not working, disaster can happen. Finally, if we believe that we have the internal controls, they are adequate and they are working, now we need to go and do the testing. Now we are going to go and conduct the testing of these internal controls. Now, when we are speaking about testing these internal controls, how we are going to do the testing is very important, especially in documenting that in your audit plan. The meaning, when you are saying we need to ensure that these internal controls are effective, what do you mean by effective? How many of you are saying, we are going to test the internal control over cash collection, to ensure they are effective or adequate or reasonable? What do you mean by that? They say give reasonable assurance of achieving the corporate objectives. But really, I don't like these words. I don't like when someone writing in the audit report nonsense. What's the meaning nonsense? Something like this. Check the internal controls. Really? Tell me what are these internal controls you are going to check to ensure they are effective. Okay, what's the meaning by effective? And reasonably working. So who determined this effectiveness? The board of directors. The meaning, please never ever use in your documentation, in your final audit report or in your planning, something called effective. Rather than using effective, ask board of director, ask audit committee, ask management, can you define effectiveness for us? The meaning, if the control is working, 97% of the time you can say is effective. Less than that is not effective. So this is why you need to define what's the meaning of effectiveness. And after that, you need to determine how much sample you need to select. Remember, this will be done during the audit stage. For example, if a process happening one time a year inside the bank, we need to audit it one time. But if it's happening every quarter, for example, every quarter the bank is actually looking at certain transaction, we need to do it on a quarterly basis. If it's happening monthly, like for example, submitting your VAT reports, so in that way we need to audit it monthly. No, we are not going to audit it monthly. We are going to audit it 2 times a year during this year. So what about if it's happening weekly? Maybe we select 5 times and we audit it. What about if it's happening daily? Maybe we select 20 out of all the transactions happening a year and we audit it. What if it's happening more than 1 time? What I'm showing you is not the recommended thing to be done. What I'm showing you is what your head of internal audit or your management team should create as a best practice to ensure that all the employees, when they are going to do testing over any process or branches, they follow this guideline. This is why you need to have a document like that for your employees to refer to. Because we don't want Mr. Ahmed in branch A doing 30 samples and Mr. Khalid in branch B doing 15 samples. At the end, when you get audit quality assessment, they say you are not doing consistent auditing. You are doing more objective auditing. We need to have, subjective auditing. We need to have more objective auditing by having from the beginning understanding of the frequency of transactions and creating best practices for all your staff over certain processes. Again, it's not going to happen over all your processes, but the certain processes that we know and we understand that we need to select certain number of samples, we need to have a sample like this for it. Or maybe it's based on the number of transactions, not based on the frequency of the transactions. For example, for this process, we are going to have 70 loans. So if we have 70 loans, how much samples we need to select from it? For example, for these credit cards, we are going to have around 300 loans, 300 cards. How many we are going to select? Or for this branch, they have around 10,000 transactions. How much we need to select? Also, is recommended to have a sheet like this where it's highlighting exactly the issue that you have. Now, after doing this, you need to consider maybe we need to conduct something called COSO-based audit. So COSO-based audit is coming now more and more after the changes in the standards in 2013 for COSO and the changing for COSO ARM in 2017. Now we can see more organizations, especially banks, with a recommendation from the central bank saying we need to conduct COSO-based audit. Let me explain to you what's the meaning COSO-based audit. You are going to look at every single internal control inside your bank. And rather than saying, okay, we need to check if these controls are working, we need to check if they have proper communication to this control to the staff. We need to make sure that these controls are monitoring all the time to ensure they are working. Rather than testing all this stuff related to the control, you can follow these 17 principles. And based on these 17 principles, you can do like a checklist to ensure, okay, Is this internal control focusing on the culture, on the ethical value of the organization? Yes. Is this actually, is there the board of directors doing oversight for it? Yes. Do we ensure that this actually part of the structure and authority and responsibility inside the process and organization structure? Yes. Is it actually focusing on making sure that we are have commitment to competence, meaning we have the right staff doing the right job, they have the right skills? Yes. Are we ensuring that these staff are accountable, meaning if a teller will make a mistake, he had to pay from his pocket for the mistake? Yes. This will show that you have tested the control, the cultural issues related to the control, which is, we call it the control environment. Why we are more driven today in so many organizations, especially banks, in doing COSO-based audit? Because testing control, rather than you come up with your own work program, that you are thinking about it and you are creative about it. This is the best practices that they created, the Committee of Sponsoring Organizations, to say, if you follow these 17 principles, you can say by the end of your audit that we are so happy to inform you, Board of Director, Management and Audit Committee, that by the end of our audit, the controls inside our bank are COSO based. The meaning they follow the best practices, not they follow your own thinking or the thinking of management or thinking of board of director. They follow the best practices. So if you see any gaps in one of these principles, you can highlight it in your recommendation that these are the issues need to be fixed. For example, when you looked at all these controls, you noticed that these controls are not communicated effectively to the staff. So you can say in your recommendations, when we have tested the control was actually working properly, it was reducing the risk to the appropriate level, it was actually implemented in the right way. However, it was not communicated properly to the staff. So the staff, they don't have so much awareness about it. So this is, or for example, there was no monitoring activity. The controls in place, but management, they are not doing review to ensure that employees are following the controls. Employees are following, but management are not doing the review. So we recommend them to do the review, so to ensure that they are checking that the employees are doing it on continuous basis. So we call it COSO-based audit. This is a full class I teach over 3 days related. How can you conduct COSO-based audit principle by principle? And by the way, for each one of these principles, they have point of focus. So they already created the checklist for you. I will share that with you over the WhatsApp group, where you will see exactly what are all the elements and point of focus you need to do. So in that way, you do the proper testing of the controls. And today, the central bank said that internal controls inside the banks are very important, very essential. So this is one of the testing you can do. But of course, you will decide that in your planning stage. Now, the question here for you, who is responsible for internal controls inside the organization when you are going to do the testing? The answer is everyone. Everyone is responsible for the internal controls. So what are the responsibility of board of directors? They say board of directors are responsible for oversight, for monitoring, to ensure that they are monitor and oversight the internal control by sending internal auditor to do audit over the control processes. So this is the responsibility of board of directors. Now, what is the responsibility of senior management, of the CEO, of senior management inside the bank? They are responsible actually for establishing the internal controls. They are responsible for saying, these are the internal controls that we are going to have in place. And then management, in operation, they are responsible for the implementation of these internal controls. And finally, internal auditors, they are responsible for auditing these internal controls to ensure that these internal controls are working as the board of directors requested. So these are the individuals who are responsible for it. Now you will ask me a question, Iyad, but you didn't mention the audit committee, what the audit committee will do. So what do you think audit committee will do here related to internal control? Well, don't take me wrong. I know some of you, you know some members in the audit committee, but audit committee, what they do? Tea and coffee. This is what they do. No, I'm not saying that they waste time, but what I'm saying, tea and coffee, the meaning they do communication and coordination. They go meet with you and drink some tea and listen to your audit plan. And then they meet with the board of directors. At that time, they drink coffee, right? And they communicate to them what you are planning to do, and they get their approval. Then they come to you, and maybe now they drink some cappuccino, and then they are actually telling you what the board of directors said. And then they go maybe drink sahlab or another thing with the management, and they will tell them, this is exactly what's going to happen. So what they do coordination and communication. This is the whole idea. Sometimes they drink karak, by the way. So this is the idea. Their job is to coordinate. They are not responsible for oversight unless it was delegated to them by the board of directors. So when we are auditing this internal control, it's very important and it's very essential to ensure that we have segregation of duty. There is no benefit of any control if one person, he can do everything. He can authorize the transaction, he can record the transaction, he can do custody, and he can do reconciliation. Because if he got all this authority, he will do whatever he wants inside the operation. Like what happened in one branch in Fujairah. What happened in this branch in Fujairah? One guy, because he's very helpful, when an employee is not coming to work, he will become a teller. When an employee in business banking is not there, he will become the business banking officer. When an employee is not in place in the back office, he will go to the back office. So he was very helpful and he got access to all this system. So he was able to do something very interesting. When one of the customers of the bank died, and after 1 month, no one actually came to request the money, he went to the system and he changed the information of this person in the system. This is, we're not speaking about today where you have OTP because the guy is already dead. We're speaking a couple of years ago. So he changed the information in the system for the person. He changed the phone number of the person. He changed the address of the person. He changed the signature of the person. So then what he did, he went and he requested a new checkbook. So what happened? The checkbook delivered to his house. Then he signed on the checkbooks and issued checks to his friends, and he was working as a teller. So his friend came to him and he gave out the money. And he was able to take most of the money from that account. Now, after 8 months, what happened? The children of this guy came to the bank and they said, you know, we believe that our dad got an account. We want to check how much money. And when they look at the statement, they were shocked. They say, how our dad, after he died, his spirit came to take the money. So in that way, they notify the bank manager, and then they discover that this employee was actually able to manipulate the whole process. Why? Because there was no segregation of duty. So this is why it's very essential to have segregation of duty. Also, when we are implementing internal controls, we need to always understand what can go wrong. I deliver so many courses in Malaysia, and if some of you visited Malaysia, you will see something called Petronas Tower. And when we are speaking about creating a project like the Petronas Tower or Burj Khalifa, something massive, the question here, do we have the proper internal controls in place? Where are the auditors to conduct risk-based audit to say, where are the risks in implementing a project like that? And we need to go and audit the major risk to ensure that this project will be successful. So what happened in Petronas Tower? In Petronas Tower, what the management did was crazy. But the idea here, where are the internal auditors? Always a question mark. When something will happen, where are the internal auditors? Your bank will give loans to massive customer and you lose. Where are the internal auditors? So look what happened here. The management decided to give the Petronas Tower to 2 contractors. They say, contractor 1, you will do tower 1. Contractor 2, you'll do tower 2. And they told them the one contractor who will finish first will get a reward. Now, what do you think now this created culture of forget about the internal controls, forget about the risk management, let's just finish it, let's do it. So where the hell internal auditors to recommend to the board of directors that giving 2 towers to 2 contractors is not going to make the 2 contractors look similar, because every contractor is going to do whatever they want. They just want to finish to get the reward. But actually, this is what they did. Now, when these 2 contractors came excited to do the project, they asked each other. The first contractor asked the other contractor, by the way, did you do geographical survey on the site? The second contractor, he said, oh, I thought you have done it. So then both of them, they went to management. They said, did you do geographical survey of the site? So management, they said, no, we thought you are going to do it. So then they stopped the project and they decided to do geographical survey for the site. And they discovered that it's impossible for them to build the Petronas Tower. Why? Because they discovered that that the first tower is on the top of the mountain and the other one is in the bottom of the valley. The meaning, if they are going to build it on the ground, because this is the top of a mountain and bottom of a valley, but it's not obvious, the first tower is going to sink, and because they are connected, it's going to take the other tower with them, and they are going to end up with the leaning tower of Malaysia. They say, oh my God. How come no one said that we have risk related to the ground? We need to address this issue before we decide where we are going to build the towers. So they say, okay, so what's the solution? They say the solution is simple. We are going to create something never happened before. We are going to go and nail the towers to the ground. The meaning, we are going to move all the 2 towers to the valley rather than the mountain. and we are gonna nail the towers to the bottom of the valley, and we are gonna build foundation. So in that way, the two towers are gonna be even. However, they forgot they are in Malaysia. The meaning, when they decided to do the foundation, they need to have concrete actually happening for 4 or 5 days non-stop. And with Malaysian rain, the concrete will not go even. So in that way, that will make the tower already leaning tower. So after they discover these facts, they have to go and get tents to actually cover the site, more than 8 circus tents to cover the site to ensure that this will protect them from the rain. So the main concept, first you need to look at the objective, then the risk, then you need to say where are the internal controls. Here, no one is asking about the risk. Everyone is saying how can we achieve the objective fast, quickly. But the disaster is not here. The disaster when they reach to floor 72. When they reach to floor 72, one of the engineers came and they say, oh, it looks like we have an issue. They say, what's the issue? They say, the tower is not straight. The tower is tilted already. What? Not floor 20, floor 72. So they say, what do you mean tilted? They say, not so much. It's only tilted like a couple of millimeters. But if we continue, it will appear. It will appear one tower straight, one tower tilted. So they say, so what's the solution? We can't bring it down. They said the solution is easy. Now the tower is going like this. For the next couple of floors, we are going to take it a couple of centimeters in this direction. So actually they build the tower like this. Of course, you can't see it in your eyes, but actually this is what happened. So again, where are the internal auditors? Where are the audit team? Where is someone focusing on the risk? When we are looking at any operation, we need to always say, what are the risks that are going to happen when we are trying to achieve these objectives, and what controls we have in place to ensure that these risks are managed properly. This is your first task. You need to check these internal controls. Now, what are the limitations of testing these internal controls? Some limitations can be related to human failure. So sometimes the individuals who are doing the testing over, who is implementing these internal controls, they will fail. So individuals who are counting cash from customers, sometimes they will fail. Or it can be control failure. What's the meaning control failure? You know, there's recently, they published that in one of the ATMs in UAE, one of the ATM was able to accept cash that is fake. That's failure in the control. How come this ATM was not able to identify that this cash was fake? Or it can be overriding of control. So that way, two individuals in the bank, they are gonna do collusion and they are gonna override the control. Or someone can circumvent the control from management level. So someone from management level can override or circumvent the control. Or it can happen with external events. Disasters will happen. And this disaster will cause a hacker or someone to be able to take advantage of the operation. So these are the limitations of internal controls. The meaning, don't say that only just because we have internal controls in operation, everything is gonna work. Because any of this gonna cause disaster in the internal control. And why all these financial crises happen, why all this disaster in the banking sector happen? Because of one of these failures. Now, when we are looking at the controls inside the organization, we have two kinds of controls. We have the hard controls and we have the soft controls. So what do we mean hard controls? Hard controls are policy and procedures. Soft control is the culture. So let me give you an example. In one bank in Dubai, it's Islamic bank. So because this bank is Islamic, the organization, they don't have a policy like this. You are not allowed to come drunk to the organization. Ooh, why? Because it's Islamic bank. Of course, nobody is gonna come drunk to the organization. But for them, having that in the HR manual as a policy will insult not only the employees, will insult the bank management, because in that case, you are saying that some individuals maybe will come drunk. How come they are doing Islamic banking and individuals are drunk? So the meaning, we are not going to include this in our policy and procedures, but we know that all the staff should follow and should not actually come drunk to the bank. And this is why when we are going to go and conduct an audit, which one is easier for us to audit? Of course, it's much easier for us to audit hard control. But sometimes we need to audit the soft control, the culture. How can we audit culture? Like we discussed before, we can use control self-assessment to audit the culture, or we can actually do what? We can make the organization send some actually private shoppers or send private staff for them to check the processes. After we test the internal control, we need to go say, should we go and test the actual transaction? Well, it depends. The meaning, let's say if you tested internal controls related to loans approval and you discover the internal controls are not effective, definitely you need to go check the loans. The meaning, we need to check these loans that the officer is giving. Are they performing or non-performing? Because the approval or the internal controls related to approval is weak, is not working. But if the internal control, we have to check the internal control as it's working perfectly, that will reduce the amount of testing related to the transactions. Who will determine that? Will determine that the analytical procedures. What's the meaning analytical procedures? The definition of analytical procedures is reviewing and evaluating existing information, which may be financial or non-financial, to determine whether it is consistent with the predetermined expectations. To give you an example, when you see inside your bank, the number of employees is going down and the amount of payroll in the HR is going up, question mark, how come we are paying more salaries and the number of employees is going down? So this is where always we go and review financial and non-financial information to say anything showing indication that something is wrong, something is not right here. Because if financial, if analytical procedure was not leading for us to think there is any red flag and the internal controls are working effectively, we will limit our testing related to what? Related to the transactions. But if we believe that actually the internal controls, it's okay, they are working okay, they are not perfect, they are okay, there are some deficiencies, and analytical procedures showing so many indications that something is not right, that customers are taking more loans and they are paying less interest rate, and the customers are not charged this and not charged that, and customers are getting loans more than they can afford. Based on these analytical procedures, we need to go do testing of transaction. This is why conducting analytical procedures will help you to get an early understanding before conducting the audit about where areas we need to go and focus on testing. And finally, the final stage when you are conducting the audit is you go and test the actual transaction. You get the actual files, you look, for example, what information you have collected from the customer. Did you collect his ID? Did you verify he is not from the OFAC list? Did you verify that he is not from sanctioned country? And then you go over the actual transaction testing for the approval or for the credit card or the financial transaction. So this is exactly the process that we follow when we are planning risk-based audit. Number one, risk assessment, then testing internal control, then analytical procedures, then transaction testing. Before we continue, any question that you have here that you would like to share on the question and answer, so we can address that before we go to continue to the next step. Let me give you a couple of seconds in case you want to write any questions in the question and answer. Any questions related to what we discussed? Just write it here. Later we can have live discussion. You can ask me question, but here you can write it so in that way we can address it now while we are going ahead. Everything is clear? No questions? All right. Now let's understand exactly how we are going to conduct this risk-based audit. It's very important to understand the steps. Step number one, again, is looking at the objective. Again, always we look at the objective. After looking at the objective, we look at the risks. And number one in looking at the risk is assessing the risk maturity inside the organization. How can we assess this risk maturity? The meaning, we come as an auditor and we go look at these risks inside the organization. And we, based on our understanding of the operation, we can say this risk is high, this risk is medium, this risk is low. Now someone will come here, they say, Iyad, wait. Inside the bank, we have risk management department. Inside the bank, we have management who already went over the exercise of saying that this risk is high, this risk is low. Can't we just rely on what they are saying? Well, I will tell you, yes, you can. And this is the second step. You can see on the side, you can actually, after you go do your own assessment of the risk, you can ask management, do you have any risk register that you can give us to see that the risk that we have identified as high, are you also identifying that risk as high risk? Because if we identified, for example, cyber attack as high risk and management identified as a medium risk, we have an argument here. We say, yeah, but wait, do you have the right for you to tell management that the risk is high or low? No, we don't have that right because we don't speak with management. Look at the other side. We go ask audit committee, what do you think this risk is? Do you think this risk is high or low or medium? What kind of assurance you want to provide related to that risk? related to the achievement of that objective. How much you want to reduce that amount of risk? What is the acceptable level of risk? So we, for example, let's make it as an example. We go and assess that the risk in this operation is high. We ask management, management will say low. We ask audit committee will say medium. Now we need to advise the audit committee saying, audit committee, we know that you said this risk is medium and you want to reduce the amount to this level. However, we believe it's high. We need to reduce the amount more. If the audit committee say, yes, we agree with you, in that way, you go tell management, now you need to consider it as a high risk and we need to reduce the risk to the acceptable level. If audit committee said, no, we are happy with this amount of risk, don't deal with it, just keep it as a medium, we will go tell the management that now you need to change your risk register to make it as a medium. It's not low anymore. So again, we don't determine anything. We just do our assessment and we check how much management is doing the assessment. We check what an audit committee they want and we advise. After we do all this exercise, we get a list of all the risk with the right ranking based on the approval from the audit committee. Now we need to go and based on that conduct our audit. So we need to create our audit plan based on this risk register, the updated risk register that we have. Then we are going to conduct the individual audits. Then we are going to report the result to the audit committee and to management. So this is the risk management approach that we follow in conducting any audit. Now we are going to go and show you step by step what is the risk-based approach that you need to follow step by step to conduct, to plan your risk base. Tomorrow we are going to be speaking about conducting that. So number one, again, what we said, number one is focusing on your objective. So number one, you focus on the objective. So let me go take you down so that it's easier. So number one, we focus on the objective. We ask the organization, what is the objective that you are trying to achieve? Based on that, we ask the question, what is the risk that's going to affect the objective, achieving that objective? And based on that, we ask the organization, what kind of control, number three, what kind of control you have to manage that risk, to be able to reduce the risk to the acceptable level so we'll be able to achieve our objective. After that, we go and say, we need to ensure and do testing over these internal controls to ensure that they are working effectively and they are designed adequately to reduce the level to the acceptable level. And based on that, we can provide the management feedback that yes, this risk is reduced to the acceptable level because internal controls are working effectively, or we have deficiencies, we need to fix these internal controls. This is the risk-based approach, 5 steps. Let's go deeper and see exactly how this process will happen. When we are trying to identify the risk at the beginning, we use something called risk map. So when we are speaking about risk map, we are speaking about the heat map. We are trying to identify here the risk based on what is acceptable. Can you see in the green is what is acceptable? You say, yeah, but who determines acceptable? Board of director, audit committee. So board of director told us that the risk here is acceptable. So in that way, if it is within the risk with tolerance within the acceptable level of risk, we can accept it. But if it's more than that a little bit, we call it as an issue. If it's more than that a little bit, we call it as unacceptable. So in that way, we need to actually create the heat map based on what the board of directors will say, based on the likelihood and based on the consequences, based on the impact inside the organization. So the way we do it, we go ask the organization, what's the objective? When they tell us the objective, we say, we have risks number one. Now we go, they take this risk number one, and based on the likelihood and the consequences, before looking at the internal controls that management implemented, we will put it, for example, it's high risk. For example, in your bank, when you give loans, there's a risk of non-performing loans. How much is the non-performing loans based on the central bank? They say 2 years ago, it was around 5.5% non-performing loans in UAE. So we have risk of non-performing loans. So what we say, for example, in our bank, the risk of non-performing loan is high. See, you say, no, yet we have controls. I say, yes, before controls, we say it's high. Then we say, if we ask management, what are you doing? Management, they say, well, we have the approval process, we have the verification process, we have the follow-up process, we look at the credit score, we look at this. So I say, great. So in that way, because you have now all the controls in place, this risk is reduced from high to acceptable level. So this is how the process of actually looking at the risk before internal control, asking what internal control we have, and then testing this internal control. If they are working effectively, the meaning this risk is reduced to the acceptable level. Then what are the stages of the audit? Again, like what we discussed before. Number one, we go do our own assessment. Then we obtain the risk register from management. And we look at the risk register in the management. If the management assess this risk and they say this risk is not important, or this risk we are aware about it, but we are not going to do anything, but we believe is important risk, we need to say no. We believe it's important risk, and audit committee say it's important risk. You need to update your risk register. So you can see here, if the risk is risk naive or risk aware, we need to speak with management and we need to make them reassess this risk to make it as a high or moderate and update the register. But if management believe that risk is important and they are doing something about it, or this risk is very important and they are managing that risk, we need in that case to go and see exactly what management is doing. And in that way, we will tell them, you said it's high or medium, and we say it's high and medium. We agree with you. And now you say you are doing something about it. Later in our audit, we are going to test to ensure that these risk management processes are working properly. Then we assign our staff and we conduct the audit based on our plan. And then we report the results to the management and to the audit committee. So this is how the process we take it. So the way of conducting risk-based audit, or we call it RBIA, is by first understanding the objective, looking at the risks that we have, determining what is this risk, is high, low, medium, looking at the controls we have, and then doing the testing. And then our testing this year will be our last audit for next year. So again, what is the process of conducting the risk-based audit? We look at the risk register. And we need to filter these risks. The meaning, when we look at this risk register, and after we audited, what's the meaning audited? We approve it with the management. The management, they said yes, audit committee said yes, we said yes. All of us, we agree that this is the risk register. What are the steps that need to be done? Number one, we look at risk within the risk appetite. This risk is acceptable. Should we audit it? No, if this risk is acceptable. But you say, but yeah, there's a risk, something can happen. Yes, but board of directors said this, okay. The meaning today, in one of your branches, you are going to have a fraud for 10 dirhams. If you have 10 dirhams shortage in the cash, are you going to do a big deal about it? Yes, it's acceptable. Maybe something happened. So if this is what board of directors said, it's okay. We accept it. They say, we have some risk, but it's not going to require assurance in this period. Next year, next audit. All right. But where are the risks we need to focus on? They say, what about the risk provided assurance by others? What's the meaning of that? You are going to do certain testing, but you discover the central bank just came last week and did the testing. So you rely on the work of the central bank. You don't have to actually do the testing for it. Or some risk can be tolerated. This risk is actually can be tolerated. It's okay. It's like high, but it's acceptable within the level of the management say it's acceptable. So it's okay. We are not going to address it now. Where is the risk that you really need to focus on? The risk that will require assurance today by the audit committee. That audit committee said we need to have assurance on it, that they have high risk. Then you need to categorize the risk. You need to say, is this financial risk? Is this operational risk? Is this IT risk? Is this financial risk? Whatever risk. And after that, you need to look at the audit universe. The concept of audit universe is interesting. You can say, we have high IT risk, but board of directors say, audit department, you are not responsible for auditing IT risk. This is IT audit department. So you need to look at the risk, and then you need to look at what? You need to look at the audit universe, because you only can audit the high risk that within your scope as an auditor. Maybe you tell me, what about disaster recovery or issue? Maybe it's not under your scope. What about financial? Maybe it's not under your scope. So whatever under your audit universe and whatever risky will help you identify your risk and audit universe. Then you select this risk, you allocate your resources, and you do the proper auditing for it, and you communicate the result to the audit committee. Now, this is interesting concept to explain to you that when we are conducting risk-based audit, we need to focus on how many times we need to audit this function. The meaning, if something is high risk, like cash, every year, like gold, every year. But if something is very low risk, we may never audit it. Very low risk. When is the last time that you checked the petty cash, if the petty cash is small amount? Very low risk. Focus on the high risk. But sometimes we have risk that is medium. So in that way, we decide some of them every 3 years, some of them over 4 years. It depends on how many times we need to audit. So this is an interesting indication. The other indication that you determine if we are going to include this in our scope in the audit or not is focusing on for how many years we have not audited and what is the result of the last audit. For example, if you audited a function last year and it was red, disaster happened in it, and you need to audit it this year, they say yes, most likely yes. See, so it's 0.74. But what if you audited, 1 year ago and nothing happened with it? It's 0.25. So in that way, it's not so much. Maybe after 3 years, you audit it again. So to determine if we are going to audit something or not, we need to determine what happened in the last audit and for how many years we have not audited. You can create something like this. Again, this is an example. You can create inside your organization something to guide your staff to how they should audit based on the last result and based on how many years they didn't audit. So in that way, that will help them identify the risky area they need to focus on. Now, again, what is the risk process? You create your audit plan. After you create your audit plan, you draft your audit scope. You say, what are the areas we are going to cover? And then you examine the risk management process. You say, what risk management process we have in place? Are they effective in reducing the risk to the acceptable level? And based on that, you conduct risk maturity. You look at the areas. You decide your audit approach. Again, let me explain here. What's the meaning of looking at the risk management? When you look at the risk management, you say, are they adequate? Are they designed properly? Are they functioning properly? If we believe they are adequate, designed properly, functioning properly, we audit them. If they are not, we audit the transaction. We are not going to audit a system that we believe is not working. And after that, we conduct our, we decide the planning, we conduct our audits, we obtain the relevant documentation, we discuss with the management, we explain to them what is our objective. And finally, we do the proper testing and we come up with a conclusion and we communicate it in the audit report to the management and to the audit committee. So this is the process. Now, this is an interesting to explain to you at the end, what is the result? At the end, wherever risk outside the green area is not acceptable risk. So we are going to tell management, listen, board of director, audit committee said this is the acceptable level. Based on our testing, we have audited your risk related to this area. And the risk is still, even with the internal control that you have, that you said this reduce it to the acceptable level, is not working effectively. Our recommendation is to implement more internal control to reduce that level of risk from the unacceptable level to the acceptable level. That's always our recommendation. At the end, we need to see everything green. That's the whole idea. To provide assurance to the board of directors that all the risks within the organization are within the acceptable level to help the organization achieve their objectives. That's the whole idea of our audits. So here is an example. You can see risk 3 is okay. Risk 2, no, we need to reduce it. Risk 1 also we need to reduce it. But why I have it here with numbers? Because you need to focus with the management today on risk 1 and 5. Don't start arguing with them on risk 4. You need to do risk 4. This is why it's very important to speak about materiality. Which risk we need to focus on today, so in that way we'll be able to reduce it to the acceptable level, focusing on the right risk.